Hey guys, Stock Saturday, and it's a fairly slow week on the portfolio. It's barely moved, down £1,000, but I have withdrawn £5,000 of the cash, probably to put on the crypto dip. It's sitting in my Barclays rainy day saver at the moment, so you get 5% on that while I wait, which is pretty nice. Pretty much everything this week has sort of moved by 1 or 2, 3% up or down. No sort of huge movers, as I say. Sort of the portfolio itself down £1,000. So I thought maybe just look at some of the moves and sort of some other news. So I did make one change as discussed last week on sort of a tax loss harvesting basis. I sold out of Taylor Wimpey and Barrett Developments. So this was about £14,000 worth of shares. So it was quite a fair loss, about £2,300, and that offsets some of the crypto gain. So quite nice. And I bought Bellway and Redrow sort of as a proxy to hold for 1 month, and then I'll switch back to Taylor Wimpey and Barrett, having sort of hopefully harvested that gain without much divergence from the stocks. So you can see Barrett and Taylor Wimpey in the green and yellow here, and Redrow and Bellway that I've got into since I did the trade on Monday. And yeah, Bellway's sort of done slightly better, and Redrow sort of broadly the same as Barrett, with Taylor Wimpey sort of underperforming slightly, but it's only sort of 5 days. But yeah, I think that sort of should be reasonable for a month. Hopefully they don't diverge too much. I guess if Bellway sort of outperforms, then I'll have a little gain when I sell back, and it may not have been quite worth it. But yeah, a gain obviously is good. Hopefully that will end up being worth doing, depending on sort of the crypto sales. Could be sort of 10% of £2,300 or 20%. So if it's 20%, that's £460 tax saved. So yeah, I think it was a good suggestion by Jackal in the Briscord. So thanks very much. Just looking at the semiconductor side, I've got quite a lot of holdings exposed to semiconductors and TSMC sort of in general, and yeah, it looks like they're still doing reasonably well. I didn't really cover the October numbers. Really sort of looking at November now, but certainly the October numbers, 56% up on last year. Not seeing the sort of slowdown from them particularly. August was a slightly higher year, but certainly well up on sort of earlier in the year. This may be because they've increased prices, which they have done, but yeah, I still think that's very good. And not a huge amount of earnings news on my holdings, so I thought I would look at a stock that I am keeping an eye on but don't hold. So Embracer Group, a lot of people may have sort of never heard of them. I sort of hadn't really heard of them until the last year, and I'd sort of been keeping an eye on them. But it's a sort of gaming conglomerate. If you're sort of a gaming enthusiast, you may have heard of THQ Nordic, and this is sort of what that company have become. It sort of almost went bust a while back from memory, and have sort of turned into this sort of conglomerate that has been on an absolute buying spree. So this is a Swedish holding. So it's in Swedish krona. This isn't $56 billion. So you do have to, if you want to do a bit of maths and put it into dollars, you have to divide everything by sort of 10.5, depending on what the current exchange rate is. But I think just sort of easier to look at it all in krona. But yeah, so 56.85 billion market cap, and yeah, they've sort of just released their recent earnings. So it's not a sort of hugely net profitable company because they're sort of heavily expanding, spending everything they can on acquiring new companies. They do sort of try and point out that their existing companies are growing, and it's not all growth by acquisition. But I'm kind of in it for the purchases, to be honest. It is sort of does sort of seem reasonable value. I mean, I always look at sort of as close to net profit as I can, and they give you EBIT, so not EBITDA. So it's just earnings before interest and tax. So they do have a little bit of debt. So you want to be really taking that interest into account and tax as well. But you can look at EBIT, and that seems to be pretty good. 460 million for the quarter. So if they were to sort of annualize this, then you're looking at sort of 1.7 billion kroner for EBIT for the year on a 56 billion market cap. So it's not too bad. And then they sort of show the adjusted EBIT where they're sort of taking out your stock-based compensation and depreciation and that sort of thing. There's obviously a lot of sort of goodwill and write-downs of how much they've paid for some of these companies, and yeah, so that isn't going to be ongoing, if you like. Once they sort of write that down, then on a sort of forward basis, they make what they make. So yeah, they show this adjusted EBIT at sort of 2.1 billion kroner. So yeah, if you were to annualize that, it looks sort of incredibly good. 8.5 billion kroner on 56 billion market cap. You could sort of say a forward earnings, sort of, if you like, of about 7 or 8, which is probably a little bit false, but reasonable to look at for a heavily growing company. And they are expanding the headcount quite dramatically. So from sort of this quarter last year, 7,400 devs to 10,900 now, and total headcount increased even more, 9,000 to 15,700. So that is a lot of expense where other companies are sort of laying off. Your Facebooks and Amazons and all them laying off 10,000 each. But yeah, I thought the earnings look reasonably good. Had a look through, and you can even sort of drill down and finally get the net profit if you go a bit further. They don't want to give it to you up front, but yeah, I think their split sort of seems reasonably good. Console games, PC games, and they also have a fairly profitable tabletop section. So your sort of physical, not board games, but sort of your more nerdy games, let's say. I'm sure everyone will sort of call it that. Your Dungeons and Dragons type stuff. But yeah, that's pretty good. And then the entertainment stuff and services is the sort of TV and film potential. I thought this was a sort of rather nice graphic just to sort of show you exactly how big they are getting and sort of the way that they're approaching it. So this isn't all of the games industry. You haven't got Nintendo here, and you haven't got sort of one or two other fairly large companies, but it sort of gives you an overview of sort of some of the big companies. So EA you've got there, and it sort of shows you all of their sort of various subsidiaries, DICE and Respawn and people like that. Tencent are sort of taking the embracer approach somewhat and buying lots of small companies and then sort of stakes in larger companies. You've got Sony with their sort of larger studios. Really, it sort of looks like a small slice, but these are sort of fairly big studios making very large games. And yeah, a load of different studios, all called Ubisoft, because they've got no imagination whatsoever. Take-Two with the, again, sort of Rockstar North, Rockstar various, as well as the sort of other companies. Microsoft, which is becoming a giant now with Activision Blizzard, assuming that goes through, going on top, or Activision Blizzard here. Yeah, so if they sort of split that up, this slice would be getting gigantic. But obviously, you can only buy Microsoft stock as a whole. You can't buy the gaming side. So I don't really think buying Microsoft is really getting too much exposure to the gaming side. It's sort of maybe 10% of their business. But then you've got this gigantic section, sort of over a quarter of the pie, is Embracer Group, and for a sort of whatever it is, 5 billion, what is it, 56 billion kroner. I think we're at about 10.5 now. Say about 5 billion, $5 to $6 billion company. This seems rather a lot of companies, and when you sort of drill down and look into each of them, they are sort of either beaten up, sort of beaten down studios, some that sort of created a reasonable game sort of a while ago, or they sort of create smaller games. You've got sort of Coffee Stain, who make Goat Simulator from memory, so it's not exactly AAA and sort of big time games, but it's sort of the indie side, and yeah, just sort of smaller, nice little games. Some of them you've got reasonable big studios like Deep Silver, and then Gearbox, who make Borderlands and sort of various other things, and yeah, it just seems like hoovering up the small stuff and the indies. But a couple of acquisitions they've made sort of in the past 6 months or so really sort of made me take note. They've bought Middle Earth Enterprises, which sort of gives them the rights to a great deal of the Lord of the Rings franchise and the Hobbit franchise. Still a bit of sort of debate as to actually how much they own. Not quite sure they're going to be owning sort of the rights to Amazon's Rings of Power series and that sort of thing. I think the sort of full-on film side does still belong to the original creators' family, but it still does seem to be up in the air at the moment. But certainly the sort of gaming side and the, I guess, maybe smaller television side and the sort of tabletop game side, they do own now. They haven't sort of disclosed the price that they paid, but it doesn't seem to be a huge amount from looking at the accounts. Although yes, so an undisclosed sum in October, so that'll be in the Q4 results. But hoping they haven't sort of broke the bank or done a huge sort of dilution to do this. Thought we would have heard if there was a sort of big dilution. But yeah, they're sort of putting that into their tabletop side. From reading, they've already had a sort of fairly successful run of Lord of the Rings tabletop games, so that may have been part of the reason for getting into it. So now they won't be licensing that, they'll own it themselves, and that sort of saves a bit of cost. And yeah, there's sort of potential, they're saying, television, movies, games, and theme park attractions. So I guess that's an area that hasn't really been addressed before. I'm not really sure what sort of theme parks they would be getting into, but yeah, a lot of potential. And sort of given Amazon seem to be pushing the TV side, I think they spent 500 million on the Rings of Power series, the most expensive TV series ever created. It doesn't seem to be going anywhere, so pretty good snap up. And then more on the gaming side, this one sort of really surprised me when I heard about it, but I guess when you think about it, maybe these franchises are getting a little bit old, but they bought Square Enix's Western development assets for $300 million. So that may sort of sound quite a lot of money, but when you look at what other companies have been acquiring, Sony bought Bungie for sort of essentially Destiny and potential future games. From the looks of it, they think basically the devs are worth buying. But not getting a whole lot of IP for it, and I think that was 12 times what Embracer have paid for all this. So they're getting the Tomb Raider series in its entirety, or the rights to the games, which the most recent, again, gamers sort of will know that the most recent trilogy, the sort of Tomb Raider, Rise of the Tomb Raider, and Shadow of the Tomb Raider, were sort of pretty good games, very well received. Deus Ex is sort of a more niche, slightly nerdy series, I guess. Legacy of Kain is sort of an older series that hasn't really been too popular recently, and Thief sort of ditto, really. But yeah, I think these are sort of IPs that could certainly be brought back and be popular again. Can sort of see why Square Enix may have sold them off. But yeah, I thought that was a sort of reasonable pickup, mainly for Tomb Raider, really. I think, that could easily just have another sort of very successful trilogy. And yeah, for 300 million, I thought that was very good. So certainly keeping an eye on them. It's a growth company, which isn't normally in sort of my area of expertise, but being in the sort of gaming industry, I think I know that a little bit better than a lot of other sort of growth stocks. So you can just see from the revenue sort of March 2020 report, 5 million or 5 billion krona rather, and yeah, this year we're at 4x that. So rather heavy growth. Obviously, the net income side is sort of taking a battering with, I guess this is sort of write-downs and that sort of thing. That's why they focus on EBIT and EBITDA. So it's your depreciation, but that's fair enough. Can see why they would sort of focus on adjusted EBITDA, because you're not going to be depreciating assets forever. And yeah, eventually you just own sort of a load of fairly decent studios and a load of sort of smaller studios. So there's a lot of potential for them to get into mobile games and sort of as well cross-selling into sort of tabletop and physical stuff, as well as sort of comics with their Koch or Koch Media, depending on how you pronounce it. But yeah, I like the sort of potential of cross-selling as well. Sort of making a mobile game of a console game maybe that didn't exist before, and sort of potentially even getting into tabletop and comic books. So for $5 billion or so, I thought this was one to have on the radar. It's been coming down sort of a fair bit over the last sort of 6 months, down sort of 50% really, almost. And yeah, year to date, yeah, pretty much 50%. So we'll see. We'll see how it goes. I'll keep an eye on them, and maybe with some Bitcoin money later on, could be taking a punt. I guess other than that, not too much to say on the portfolio. Been a bit slow on the other stocks. Not too much happening, but I'll take that in the sort of bear market environment, and wait and see if I either spend some of this cash on stocks or go rogue and even withdraw that to pile into the crypto fire. So yeah, leave your thoughts in the comments below, and like and subscribe. See you soon.